Hey traders, it's Leaf West. Just going to do a sort of a mini update of what my market outlook is. Really hasn't changed from my Are You Ready Part 2 posting from last night. I'll just go quickly over some charts, just review that, I guess, again. Actually, what I have up first is the VIX Volatility Index, the CBOE Volatility Index. This is the weekly chart, and it's interesting because we're at levels basically that the market really hasn't pushed below too much in the last year and bit. Actually, if we go back even further, I wonder if we can get a monthly up here and how far back we go. Monthly. Yeah, so, you know, we're in a range that has proven to be pretty much near the low of where it wants to go, especially of late. So really, to push much lower, I'm not sure what would have to happen. And maybe the Fed printing, giving money away for free. I don't know what would cause the VIX to break down lower. But to me, it kind of looks like we pulled back and we're holding the 78.6. And if you go to the daily, you can see we had these yellow candles here, and then boom, we came out of those yellow candles. The contraction pattern or contraction candles of trend strength. And if you actually go to the daily, you can see that we are in that situation again right here now, and that we are, let's see the trend strength. So you can see my trend strength is actually below zero. You get yellow candles when my trend strength is below zero. You get dark blue when it's above 100. Anyways, so we can sort of see that we made a sort of a first push higher into the highs of the prior bounces, and then pull back. What did we pull back to? Let's take a quick look. Looks about 50%, is it? Actually, just past 61.8. 61.8 held there, and it bounced to the highs. And if we look at whether that's a C wave or possible 2 wave, we should be able to see that. So it went higher than what a C wave would give us. So then let's see if that's where a 2 wave should have been. It's extended on that ordinary way of doing it, and if we use the alternative way, you can see almost to the penny it hit the 1.618 extension on the high. So that to me looks like well, yeah, if that's the second wave, the third wave is coming, and we've pulled back and we're holding the 78.6. So I would say it's important that the VIX does not break this level from Thursday. The high there was 1951. Let me just put a alert on that. 1951. Do an alarm. Here we go. And actually, I'll put an alarm on the bottom of this wave too, which is 1575. 1575. All right, so I'm all set on the VIX. So I'll get notified if it does break out of this range. And if VIX does break higher, that means the market's heading lower, right? So we all understand that, how the VIX works. So let's take a look at the spiders. So here we had actually today the spiders put in a yellow contraction candle, and you can see what's happened here. The trend strength is whittled down to zero. The only thing that's interesting, and I'm not saying the market's going to break down or above, so I really don't have a clue. Well, it's not that I don't have a clue. I really don't want to have a bias. But generally what happens is when you have trend strength, like for example here, the market was kind of making a corrective move higher, and trend strength was weakening as price was going up, and then bang, it fell out of bed. Not saying that's going to happen here, but generally I've noticed that when you have, like for example here, you have price rising while trend strength is declining, and that's not a good sign. But that's not always the case. Like for example here, you had trend strength declining as we were coming out of the lows of of middle of December last year, right? As we were moving up into resistance, trend strength was declining, and then we broke above it and away we went, right? And then the trend strength started to pick up, and that's all she wrote. So, you know, my bias would be to say that as trend strength is declining here, as price goes higher, that the bias would be that price rolls over. But like I said in the blog post yesterday, we're really in a precarious spot right here, and it's important that we look at the waves as they produce themselves on the sort of 15-minute and 60-minute charts. So let me get those up for you. Hang on one second. All right, so this is the 60-minute chart for the spiders, and like I said in the blog post yesterday, one of the issues that we're dealing with is the fact that we moved up into resistance of this wave down. Again, this wave down corrected right into 61.8. Let's just confirm that. Yeah, so basically it held the 61.8. The 61.8 held the level here, and we bounced, but it was a one-leg bounce, which shows a lot of strength, but it shows a lot of emotion. So what's interesting is that the price action today really showed the market's unwillingness to sell off hard. And I think the futures are up 5 points, so roughly 50 cents. So if you were to look at the high from Friday, which was 135.89, we ended today at 135.43. So add the 50 cents of futures change as it stands right now, and you get right to the high of last Friday. And once we get above the high from Friday, either we're going to be a big bull trap and catch some people, right? It's either going to do. So if this is the high from Friday, and that's right where the market is overnight, right? We could gap and go first thing tomorrow, get people, take out stops, get people to buy the break, and then do what it does, right? Pull back and then go, or pull back, bounce and fail and roll over. So you just gotta be careful, I guess. Let me get the 15-minute chart up here. So this is the 15-minute chart that I have up on one of my monitors through the day for the spiders, and I drew this line here, this resistance line at Friday's high at 135.89, and this red dash line here, for those of you that are frequent viewers of my videos and posts, is the ATR resistance line. And actually price bounced off that twice today, and I should have caught I caught actually a nice trade this morning on the 3-minute chart. I caught these nice dark blue candles. I got in at 89 cents and wrote it to here. Anyways, but that's not what we're talking about here. That's not really relevant. Let's just get rid of this, put it back in its spot. But I should have caught this second trade. Resistance there, but it was kind of focused elsewhere. But again, you can see how the emotional move up, we really haven't had a proper structure of a corrective bounce into resistance. 61.8's right here, Friday's highs right here, the 15-minute ATR resistance is right here, and the 78.6 is right here too. So we can bounce, break the high, break these lines, and then fail up here, or else we could just keep, the bigger time frame charts could take this thing and keep going. Like the market today was, the S&P was up was down 3 handles, right? So when the market is that tight, the 5-minute chart or the 3-minute chart is the chart that you want to trade, right? And when it expands more than 6-7 points, that's when the bigger charts could take over, and you want to look at the targets that are generated by those charts. So you kind of have to see what charts in play for the day, and go from that point. So the big question mark is whether, if we do break the highs of Friday and this resistance line, does the bigger charts kick in? So I think if we get above 136.53, there's always a risk of the fake out, right? So you just have to be careful. Watch the internals. Watch what the market's doing. If you're getting a lot of follow through in a lot of stocks, that's a pretty powerful sign. Watch the up down volume. That'll tell you which way the market wants to go. Anyway, so it's really, things aren't that different with the other indices. So I won't belabor the point and go through all those. I wonder if there's anything else I should look at. Apple, maybe? Okay, so here's Apple's 15-minute chart. Again, it straight up shot right to the 61.8 line as well. Made, I guess, a little more of a sell-off than the spiders did. But again, I think Apple's daily chart is pretty bullish, so you should assume that. Yeah, it's too messy to look at that way. Let's just go back. I think you still got to assume that as long as the market's intact, you got to buy these pullbacks on Apple. And it bounced right off of the ATR support level on the 15-minute chart today. So those are my kind of focus of stocks right now, is the spiders, Apples, and whatever else is going on. Like I think IBM reports tomorrow. Yeah, it looks pretty bad actually. If the first concerns about world growth, global growth, and a global slowdown in technology spending, IBM is going to take it in the ear. And we're right at lows from today. We finished almost at the lows of the day, which is basically right at an ATR support level that probably will get taken out tomorrow. And then there's a risk that this is a pretty ugly looking chart. What I've shown you, that the support level, this is wave 1, wave 2, and this is the third push down, that the target for wave 3 low is right there. Right, so normally the 1.272 is right around the area that you'll see support come in, but it can't extend, obviously. We're starting to see maybe a slight divergence, positive divergence in the volume zone oscillator. Let's see if we got see, this does not look good. Momentum has made a new low for this whole push down. So my bet is that any bounce we have right here, price is going to get, well, this low is going to be revisited. So actually, I'm going to focus on this one tomorrow, because if it's bad news and the market wants to sell it, I think it's going to break this low, and it's got another good push downward. So maybe we're going to get down to this 173 level, or closer to 173 than we are to the 181. So that's something that people can look for tomorrow then. Actually, CMG was another one. I didn't pull my trigger on the short today on this one, but it is right in the zone now again for a short. For those of you that haven't been reading my posts, let's take a look here. This one had a nice, look at the momentum downling out right there to down here. So then basically you want to get the bounce into resistance and then sell it short, right? So if you looked at this move down from the last high, we're just on the cusp of 50%. And I'd rather see two waves up. Let's just see if we go down a 60-minute chart. So we are making a second wave up. We're getting dark blue candles on the 60. Right? Let's just see here. So we pulled back far enough. We pulled back past the 61.8, right? And if we reverse extend, and we hit the 1.272. So actually, I'm going to focus on this one tomorrow as well. It can move quickly against it, so it's just a tricky stock to try and play the turn. It's better to try and catch it when it's trending down than trying to catch the top on this one. But to me, I think the 15-minute, if it breaks this, when it breaks this 15-minute ATR, I think that's a safe short. So that 15-minute ATR level at 392.79. So I'm going to put an alert in for about 393.18, 15, let's say 15, because that will be the confirmation. So anyways, so we're making a lower high here. So if we do take out this low right here, so the only problem is that you don't want to be caught doing this, right? You don't want to be caught having this pullback being A, B, C, and then you make another push higher, right? That's what you hate. I've had that happen to me before, and you feel like a putz because you should know better. So in theory, if you really want to be safe on this one, you should, that's, the odds are 392, say 392, right on this level here, if the price breaks that. So basically the bottom of this level. So I'm going to put another alert in here. At that level. Okay, and is there anything else that is interesting? Goldman Sachs. I should have held a piece of this because it's actually holding really well. But I do have a target. What's this target from? Okay, so I reverse extended this pullback forward, and this could be just a minor wave push through to this high, and then get a bigger pullback. So, ideally, if it makes it all the way up to this level, right? Say it pushes up on the earnings tomorrow, then I'd like to buy some kind of pullback down to about $95 and then play a bigger move higher. Again, as I showed yesterday, these waves all build on themselves, right? They start out small and they get bigger and bigger. So there's still, if Goldman does well tomorrow, there's still a chance to play that stock for some upside gains. All right, so we're at 17 minutes. That's probably good enough, guys. Good luck, and we'll talk to you tomorrow.